Hi guys, it's Thomas here from COTBASE.com. Welcome to a weekly COT review. Today we're going to be analyzing the 28th Commitments of Traders Report of 2024. And as we always do, we shall start off by looking at the largest changes in commercials net positions. Before we jump to the review, just a brief reminder for those who are new to COT analysis. Here at COTBASE.com, we offer a lot of educational material. Not only do we have these in written format, but we have some very useful videos as well that can guide you through the analysis process. These videos can be found underneath the help menu over here. If you have further questions or need assistance in anything, then please reach out to us at info@cotbase.com or just comment underneath the video. And I'd also like to mention that if you do like this content and appreciate what I do in these weekly reviews, please like the video, and if you have not yet subscribed, then please subscribe. We've just launched an Instagram page as well. The link is in the description below. Let's get started. So we are analyzing, once again, the 28th Commitments of Traders Report. We are looking at the longest history of COT data, which is in the classic report type or legacy report, as CFTC calls it. And we're analyzing futures and options data combined. Okay, you can see that soybean oil is on top of our list when we are measuring the largest changes in commercials net positions on a look back period of 52 weeks. So that's what this column here represent, and you can see the 27% over there. If we open soybean oil, you can see that this is the change we are talking about. If you measure this change to the past 1 year, you can see that it's not only much greater than average, but it's actually top 3. It's hard to tell if this is larger or smaller than the change signal from before. One thing's for sure, you can see that there has been a reaction in the market already. Now, if we move to the 5 years chart, then you can see that actually 2 reports ago, we had this significant bullish COT Extreme signal in soybean oil marking this bottom. So it was a successful COT Extreme signal. However, we are moving away from those bullish extreme levels. One might ask, what's a significant bearish extreme? Well, this is a 5 years chart, and you can see that soybean oil could easily reach much greater bearish extremes when commercials are around 150,000 contracts net short. Large speculators could be above 140,000 contracts. That would constitute to a bearish COT Extreme. You can see some great examples, great signals from the past. That's not the case right now. I believe the bullish extreme is still in place, at least until we hold this support level from where it started its rise. These larger than average changes, of course, can in the short run influence the price, and we may see a bit of a decline in the near term, but the larger term picture right now is still, I believe, bullish based on the extreme that is present in soybean oil. Moving on to our next market, a metal, palladium here. Here we have a 22% change in commercials net positions. As you can see, this change size, if we compare it to the past 1 year, is a bit larger than average, but nothing unusually large. We have seen such changes in the past. I think this bearish change signal over here, maybe not as clear on the chart, was much greater than average, coming at this top over here. The past few reports, past few weeks, we've seen bearish changes, so that may be what's causing this decline right now. Moving to a 5 years chart, you can see that actually early part of June we had this bullish extreme. We're still there, but I mean, that was definitely on this 5 year chart the most bullish extreme. Could have been successful, and it is pushing the market to higher levels. The next market is going to be British pound with a 22% change, so the same percentage, of course, but it does not really mean anything until you open the chart, because we are, of course, measuring these changes on a 52-week time horizon, which of course corresponds to a year. And what we do with the change signal is we measure the bound in between where the trader net positions are moving, and then measuring the current change size compared to that entire range. Please go check the video on COT change signals, the tutorial on that, if you're interested in how you analyze changes. So this is a bearish change signal, greater than average. I'd say top 5, coming at a point in time when the British pound is in a rally against the US dollar. Moving to a 5 years chart, you can see that we are actually not only witnessing a bearish change signal, but with this change, commercials have reached 100,000 contracts net short level. Large speculators are gaining on that 100,000 contracts net long. Not there just quite yet. What does it mean? Well, you can basically go back in time and see what has happened to the British pound whenever we were at a bearish COT extreme. That usually coincided with a top in the market. If we open the max time horizon, you can of course see that this 885 report extreme measured in commercials, but that's the exact same extreme currently present in large speculators, means that we need to go back in time until 2007 to see that extreme, and you can see that was a significant top in the British pound. So once again, we have this bearish extreme. We are expecting this to push prices lower. Moving on to large speculators COT extreme analysis, we have corn on top of our list with an all-time COT extreme in large speculators net positions. Of course, we are at this max chart. Of course, COTBASE.com offers you the entire history of COT data. So that's something you can look at, and of course it's clearly visible that this is a significant bullish COT extreme. I just like to use the 5 years chart because it's just more clear, and you can see the past 5 years price movements on it. So it's a bullish extreme, suggesting in the medium to long term we should see corn start gaining in value. That being said, of course, I would not be surprised if this extreme widens to greater levels before we actually reach a bottom. But it's good to know that if you are trading corn, traders are shifting gears, and we are witnessing this significant bullish COT extreme. The Swiss franc is our next market. Here we have a 888 report extreme. So again, a very decent size COT extreme in large speculators net positions. This is a bullish extreme once again. And then last but not least, we have the Brazilian real, where we have a 226 report extreme in large speculators net positions, 238 in commercials. And again, of course, this is a bullish extreme, suggesting higher prices coming. Now, I have received a request to show Tesla, and I will show you Tesla stock on TradingView with our wonderful iCOT Intraday Indicator. However, used on a daily chart, it can still be information that's valuable. So the iCOT Intraday Indicator is something we developed after many years of research. So if you come to indicators, you'll find the Pro, focused on classic COT analysis, and then the iCOT Intraday Indicators, which we developed after many years. It was a huge goal to reach this so that we can bring COT analysis into the shorter time frames. This is gold on a 1 minute candlestick chart, and this chart will explain to you the different signal types. These are our score charts, but we do show them in the same color coding as what you see in COT charts. So it's more easy to understand the correlation between the signals and, of course, these stress levels. So when we have an extreme in commercials, the red line, then that is shown with a yellow diamond underneath the candle if it's a bullish extreme, above when it's a bearish. Speculators are shown with the candlestick changing its color to blue, and when both happen at the same time, then we actually get these stripe signals, these vertical red or green lines that can be very, very helpful determining the extreme signal itself. So we can use these indicators on not only commodities where we have futures and options, but we can actually use it on stocks, on currencies, anything that has price data, volume data. It will work. So this is Tesla stock. You can see how well just before the tops over here we're getting these bearish stripe signals. Around the bottom we're receiving these signals of support, and just before we see this current rally we have a decent bullish stripe signal as well. So I think although it's designed for intraday traders or helping you enter and exit certain trades, I think it can be very well used on longer term charts as well. If you have any questions, once again, just pop us an email to info@COTBASE.com, and we'll try to answer your questions as soon as possible. There's of course the option of just commenting underneath the video. Once again, if you enjoyed watching, please hit the like button, and if you have not yet subscribed, then consider subscribing so you get notifications when a new video comes out. Thank you very much for your attention. I hope you enjoyed. If you would like to check out the next review, then please subscribe. And thank you for your attention. Have a wonderful weekend. Take care. Goodbye.